Hey, Henry, can you hear me?
Yeah, yeah.
Okay, we're just trying out the tech just to make sure it works, because this is streaming live via one of our platforms that we use for the event.
No, no problem. No problem. That's why I logged in earlier, just to make sure.
So as a heads up, you will need to turn on your video eventually. So I hope you're comfortable with where you are.
Yeah, I'm not wearing a suit though, but
It's
I'm
okay.
comfortable.
Hello, everyone.
Hi, Mark. Welcome, the rest of the team here. I think we can start.
Okay.
Irene, please.
Hi, everyone. My lighting is not very good, but I hope you can see me clearly. Hello? Hello?
Yes, I can hear you. Yes, I can hear you.
I think we can start off. Raymond, is that all right?
Yeah, please go for it.
Okay. Good evening, everyone. Good morning for Mark.
Thank you very much.
Yes. My name is Irene Eyojire. I'm a partner at ByteLex Advocates. We've not had a chance to meet before, but I'm glad to meet you on this panel today. Structure and tax at ByteLex, that has been my area of practice. So today, I know you're all aware of the topic, but I will just give us a head start on what we're going to talk about. So this year, as we celebrate the next .legal summit, which is ideally a celebration of the startup ecosystem in Africa, we wanted to look back at the past 2 years, which have been characterized by constrained mobility due to the pandemic. And we want to see what trends have developed in this time, specifically in the area of venture finance and due diligence. So without further ado, I'd like to invite the members of our panel today to give us a brief introduction of themselves. Then after that, we shall dive right into the panel. I'd like to start with Henry. Could you please tell us a bit about yourself, and so that the listeners can get to know about your expertise and what you bring to the panel? Thank you.
Yeah, sure. Thanks. So briefly, my name is Henry. I'm an entrepreneur. I've been in business for over 20 years now, but I run a tech company now for the last few years in 6 countries, but we operate mostly in East Africa. And basically what we do, we're building distributed cloud infrastructure to bridge the digital gap, mostly in rural area, refugee camps, and semi-urban area. Thank you.
And my name is Mark Heinen. I currently am the Vice President of Business Development at Stellar Development Foundation, which is a crypto layer 1 blockchain that is focused on emerging markets. Specifically, the foundation which supports the network is focused on enabling equitable financial services in emerging markets. So through that, I've done a fair amount of work in Africa and elsewhere. I've helped and coached companies in fundraising. And then probably even more relevant for this panel is my work with Next Billion Advisors, which is how I'm aware of Next Legal and Raymond. And I think Arid, we came across Arid as well. So this is basically a referral network of operators in tech hubs like Silicon Valley and New York who have spent time in emerging markets and have a foot in both worlds and can help founders accelerate things by serving as advisors or advisory councils.
Thank you so much, Mark. So the topic for today is raising capital from diverse sources. And we're looking at emerging trends in venture finance and due diligence. So I will start off with the question directed to Mark. And the question is, the disruptions that have been experienced in the recent past in regard to how investment is being done. Specifically, would you say that this the period that we've had and the constrained mobility do you think it has had a significant impact on the ability of a startup in what have been referred to as frontier markets, that's sub-Saharan Africa, their ability to raise capital? Would you say it has had an impact on that?
Well, I think it's definitely had an impact, but I think the impact has not all been negative. So, I mean, I think what I've seen, and obviously I have a certain sample of people I've interacted with, and it's not universal, but what I've seen is obviously you are not able to do the networking that you normally need to do, especially at the early rounds when you're trying to actually go from 0 to 1 and raise your first, $50,000, $100,000. Networking is really important. And so what I've seen is people have had to rely more on friends and family to get to that first stage. However, I've also seen that because international investors, global investors are more willing to invest off of a Zoom call, it actually has opened up opportunities to engage with a whole new set of investors that they normally would not have been willing to engage with because it would have required a flight or would have required trying to arrange in-person time. And so I think that's been actually quite helpful for a lot of entrepreneurs.
I find that interesting that you say that investors are willing to invest over a Zoom call than they would be willing in the past. That's a good development to some extent, and that would make me look to Henry. I know that during this period you were in the process of organizing yourself to receive investment. Did the constrained mobility make it harder, or it actually made you more open to use options that you wouldn't have used previously?
Yeah, I mean, the constraint make it harder because we have a very visual product, right? So yeah, you can share videos, you can share certain things, but sometimes, well, at least my experience, investors like to come on the ground, see how the product is operating. So that has been a challenge, especially we in a very, we in a deep tech space. So it's a very new product where you cannot, reference to any other company. But at the same time, as Mark said, I've seen a lot of investors that are just open to conversation now online. They understand the restraints, they understand the challenges. They're not really necessarily, so it depends who you're talking to, but it has been challenging for sure.
Okay. And still back to you, Henry. Do you think there's any way in which technology can help to ease those challenges, especially the challenge involving what's been viewed as an information barrier?
I mean, the challenges as a African entrepreneur also is to create trust when you deal with foreign investors also, so.
Hello, Henry, are you still
some
with
of the
us?
things, yeah, can you hear me?
Yes, I can
Hello?
hear you.
Okay. Yeah, so what I was saying,
I can hear you.
It seems like there's a delay, but anyway, I'll go ahead. But the challenges, some of the challenges as an African entrepreneur also is when you deal with foreign investors is how to build trust, especially when you work in a market that they don't know about or they're not necessarily engaged in, how to build trust. So I think, for example, some of the question we get is, how can they check if we really registered in those countries of operation, for example, right? So digitizing some of the documentation, the registration process like Rwanda is doing is very helpful, right? It facilitates instead of having to scan documents and stuff like that. So those are the areas that I would say, it will be very, very helpful for startups. But other than that, there's a lot of technology out there that's, solving the friction. For example, companies where you can register your cap table, so those are things that are really helpful also. And I see start coming up on the continent also.
Okay. At least that one, I can agree with that. Digitization of public registries for the legal due diligence aspect would be a very welcome, would be something that would contribute a lot to bring some comfort to the investors, especially if they can confirm some of these documents without having to have a man on ground. And so that takes me to the next question is, Mark, directed to you. Do you think that to some extent the nature of the investee companies may account for that shift in practice to do most of the, to be able to ease the due diligence process?
And when you say the nature of the companies, what do you mean by that?
By the nature of the companies, I mean, we see, let's give an example of fintechs. We start to see that most of the information that you would need to do, let's say, analysis of the business model or of their profitability is all information you can easily get without having to do a physical due diligence exercise. So do you think that the nature of the companies that are receiving interest, that are getting interest from potential venture investment, also has also contributed or can account for the shift in the becoming more comfortable doing due diligence virtually? Yeah,
I think it's a good point. I mean, I think there is this challenge around trust when you can't meet in person, and when, especially if you have a physical product and someone isn't actually able to try the physical product or see the physical product. I think there's also, in some economies, it's harder to actually build a virtual data room that has all the information in it that someone needs to verify that you pass due diligence for investment. So I think I think those are two challenges that you basically need to overcome. And I think it's definitely the case that a fintech or a consumer fintech where someone can try the app out right away, understand it, get into a data room, see all the data, see the online documents, maybe like Henri was saying, could have a Carta account where they can see the cap table and they can get to that high level of trust and confidence much more quickly in that scenario. But I would say that doesn't preclude companies in the physical space from being able to raise. So one of my companies was actually a drone company that produced drones for construction monitoring and software associated with those drones. And so initially we did have to do physical demos out in the field to get investors comfortable that this was actually a thing. But over time, I think what we found was that through the right networking, through getting validation from other people, we actually found that you can build the confidence level that we got in the field. We just had to work much harder at getting explicit referrals and explicit testimonials from existing investors.
Hello?
Yeah, that's the main thing I would say.
Sorry, Mark, I didn't get that last part. You were muted.
Oh, yes, I was. Can you hear me now?
Yes, I can hear you now.
Yeah, okay. Yeah, I actually don't know what part you didn't hear, but I wrapped up with, I think what we found was with a physical product, the most important thing is to get testimonials from other investors to build the confidence another way.
Okay. Okay. I think that's a take home, that if there's something that you think will not be sufficiently portrayed in the virtual due diligence, then you'd have to improvise around how you present it to the investors. Henri, you would have been forced to do a fully remote preparatory exercise, due diligence. Do you think something was lost that you would have benefited from if you had on-site meetings?
Yeah, of course. I mean, the impact on the ground, it's kind of hard to duplicate that, right? When people see a product physically, see the impact it brings on the customer, experience the product physically, it's a game changer. It really, you know, accentuate the story. And then, you know, explaining a product and showing a product is two different things. And it depends on businesses, it depends, but our product is a little bit more complex. So it's very difficult to really explain our product just with words, even with pictures, you know, so a lot of time we use video, but they don't have that experience. It's it is challenging, you know, so you have to have a different approach of certain things, but some investors like the feel and touch of what you've created, and you just can't duplicate that in a digital format.
Yeah, I'd agree partly there. And as I look to Mark now to give us some insight of this, what would be your estimation on the VCs or venture funds or any angel investors who have been willing to make an investment and the due diligence has been fully remote?
Well, I think the expectation is, first of all, that you have a very clean data room and that your data room is also comprehensive, right? So it may be even more comprehensive than pre-pandemic. So I think the expectation is that you've not only added your corporate docs and all your contracts and backgrounds of your founders, but also maybe one step further and showed demos of your products and maybe even your Google Analytics or whatever you're using to show traction. You actually load those things in as well. I think that is the primary expectation. I think the secondary expectation is that you're willing to spend a lot of time obviously on Zoom, on video calls to talk through your business, and that your customers are willing to spend the time. I think, especially in a B2B context, customer referrals are really, really important, especially at the Series A and Series B stage. The investor is really primarily trying to figure out product market fit. And so the expectation is people are willing to spend that time.
Mark, you're muted.
Yeah, no, that was it. I wrapped up.
Oh, okay. I'm going on there. But I thought you had muted by mistake. Okay, and still with the Next Billion Advisors, have you benefited from the network? Is there
Yeah, I think there's some network issues. I don't know, Henry, if you're hearing the same thing, but it's breaking up quite a bit. Henry, can you hear me?
Yeah, I can hear you. I think
Okay, right.
she's having a network
Not
issue. I think. Yeah,
okay.
yeah.
Hey, Irene, I think we lost you briefly there.
I think it was my network.
No problem. You need Henri's product.
Can you hear me now?
Yes.
Okay. Saying I was asking, the question was about the networks and how those have helped in cases where you've not been able to do engagements.
Yeah, I mean, I think so. The idea, I think you were asking about Next Billion Advisors. Is that correct? Yes. Okay.
Yes.
Yeah. So I think the general principle behind Next Billion Advisors is that there's, it came from my own personal experience. So I started a couple of different companies over the last 6 years, and most recently was PayJoy, which was focused on credit and emerging markets. And I found myself in various cities, ranging from Mexico to Manila, and I would be meeting founders because we were often did partnerships in country, and those founders would often be trying to get their business off the ground, and I would have this realization, which was that it might have been easier for me to actually launch a product in these cities than the local founders, and that felt really deeply unfair to me. I've been focused on access for a long time, and so I felt like local people understand what the local solutions are, and really the main difference for someone like me coming in is access to know-how and capital, right? And access to know-how and capital should be even more evenly distributed, right? I think there's that famous quote, "The future is here; it's just not evenly distributed." Getting that even distribution of know-how and capital seems really important, and so. The idea behind Next Billion Advisors is to basically assemble a group of very like-minded ex-founders, operators, investors who actually have had experience in emerging markets, real life experience, and also have had experience in those, tech hubs like Silicon Valley, et cetera. And so then can actually form that bridge and can make it super easy for a local founder to go global, right? And so there's really no reason why the next Stripe can't come out of Nigeria, for example, right? I know, Paystack was acquired by Stripe, but there's no reason why the opposite can't happen, right? That a scale company, a global company emerges out of emerging markets and then acquires a company in the US. I think if you just look at the demographic trends happening right now, the middle class is bigger than it's ever been before. Most of those people are actually outside of developed markets. And so there's a demographic shift and a wealth shift where a lot of new consumer activity is going to happen in new markets. And that means that I don't think it's a coincidence that TikTok, grew quickly and came out of nowhere for people in the US. Because ultimately it's a demographic thing. Now China's at a stage where it can actually launch one of these companies. So I think the idea is that make know-how much more readily available to more people and do it through a referral network. And I think we've seen a lot of success so far with the founders who have worked with us.
Okay. I didn't understand something there. So how does Next Billion Advisors do it? Do you have different advisors in the country who then let you know about the startups? How does it work on the whole?
Yeah, so it's basically a referral network. So we have advisors globally. There is a bit of a concentration, I would say, in certain cities like New York or San Francisco or Mexico City or even Hong Kong and Singapore, but and Jakarta now increasingly. But then we also have several in Africa. But I think the idea is not necessarily that you need someone who's in your country. I think the idea is that you basically get referred to someone who has relevant domain expertise for the problem you're trying to solve. So if you're focused on fundraising, you want someone who's really good at figuring out your pitch deck and connecting you to investors. If you're trying to solve a go-to-market problem, you really want the best of that. And if they have some domain expertise in your area, that's good. If they have some connections, that's good, but that's not the primary thing. The primary thing is the know-how on actually getting from 0 to 1 and getting going. I think I've been a founder a couple of times. Like, what I just wanted is I wanted the person who's the best at that. I think I knew I had the domain expertise. I didn't need that domain expertise. I just needed I might go elsewhere for the domain expertise, but like the more fundamental thing is more around coaching and mentoring on the core challenge of finding product market fit or getting something done, which I think is a bit of a discipline, honestly, a bit like, law is a discipline. I think there's a general purpose discipline that is broadly applicable. And there are people who are really good at it and people who, because they're really good at it, can really help other founders.
Okay, that's a very good initiative. So still in line with getting the earning investor trust and getting them to bet on your idea. Henry, have you found that at times there's pressure to give the investors something they're familiar with in terms of structuring how you're doing the business? Structuring, I mean the setup, the legal setup and everything. Do you still feel like there's that pressure still exists for an African startup?
On the legal side, I'm not sure what you mean by pressure to give them the right structure that they need. What do you mean on the legal side? I'm not a lawyer, so I can't really. Usually,
sorry.
I let lawyers handle
the
legal part of things.
What I meant was, do you still find that maybe it would be faster for them to come to you with an investment if you are organized in a way they understand, maybe as a Delaware corporation, or you had some elements that they were more familiar with? That's what I meant.
No, absolutely. I remember clearly one of the early early investment we had. Their due diligence took 6 months because our entity was in Rwanda. They never invested in Rwanda. They didn't know, the laws. They had to hire a lawyer. The process was very, very long. It was a very small ticket size, but still, it took a very long time. We've seen, ARED now is structured in Delaware now, and that's because, for two reasons. Number one, what we realize is one of the challenge also is the type of technology we are. If we in the infrastructure space, right? And infrastructure investment, you don't see that much of it in Africa. And if you want to cater to U.S. investor, you need to have a U.S. entity. That's just a given. It's at least from what I've seen, it's almost impossible to get a U.S. investor investing in an African entity, especially if they never invested outside the U.S. or never invested in Africa. So yeah, you see those things because the pool of investment in Africa is still very low. And you see a lot of investment focused in a specific sector, like fintech right now, it's what's booming, right? But if you're dealing with hard tech, deep tech, infrastructure, and so on and so forth, there is no investment, at least VCs in that space, unless you're dealing with institutional investor like banks and all those things. So yeah, there's a lot of pressure. We still, until we develop the local ecosystem, most of companies like ours will have to have entity either in Europe or in the US to really cater to those type of investors.
So I actually am really interested to dig in a little bit on that.
I see where you're coming from.
Sorry, I think there's a little bit of a lag.
Yes, I wanted to see whether you hold the same view.
I think I might have missed the question. There was a bit of a lag. I was saying I'm really interested in digging into what you just said about corporate entity, where you put your corporate entity, because this comes up time and time again for me, specifically on the do you set up the Delaware C Corp, or do you? I've seen a number of companies in Africa set up in Mauritius. I've also seen a number of companies set up local entities and then really push that's just the best way to go because it's cleaner and easier, especially companies that are like, later on, that they have a number of employees, they find it more difficult to set up elsewhere. Did you find that, Henry, I'm just wondering, in your investor conversations, did you find that was it the angel investor that wanted the C Corp, or even institutional investors, basically, if they've never invested outside the US, they just on principle decided they didn't want to invest outside the US? Or do you think it was something specific to Africa, like they've invested in Indian companies, but for Africa, they prefer it to be in the US?
Well, the biggest feedback I got is that it's about how well they protected the market they invested in, right?
Mm-hmm.
So they don't know if things go south, how can they, what are the laws in the country that protect them? And that's the biggest thing. So if they don't know about Rwanda, for example, they never invested in Rwanda. They have to do the due diligence on the law itself first before they even cater to what you think. Everybody knows Delaware. Everybody trusts the U.S. Structure and entity. So when you have a U.S. entity, that already alleviate all those issues. That's the biggest thing I've seen. Now you still have other challenges. For example, if they don't invest in the U.S., in Africa, it doesn't matter where you set up your entity. They're just not going to invest. They want to, if they focus on market like U.S., Europe, Asia, then they're not going to invest in you. But I've had more conversations since I've had a structure in the US than before when I only had a structure in Africa. That's for sure.
And how long did it take you, if you're willing to share, in setting up that US entity? Did you start with the African entity, or you always had the US entity?
No, I started with the African entity.
Right.
I was very naive about the investment ecosystem. So I'll tell you, I really thought all matters is traction if you're developing something great. But I started with the African entity, and then I spent 1.5 years, close to 2 years trying to raise, and I couldn't get anywhere. So, and I shifted to set, and then from the feedback I was getting a lot of time is, hey, we don't know about Rwanda. We don't know the laws. We don't know this. If you had a US entity, come and talk to us again. So we decided, okay, let's shift to set up a US entity. And that took about 8 months. So that was a long process also to structure, all to do the flip, basically.
Yeah.
That took 8 months to finish the whole process.
But your conclusion is that it was worth it based on what you've seen?
Oh, absolutely. Absolutely. It was definitely worth it. And people take you it's all about also perceptions.
Right.
If you talk, even on the ground, if you tell them you're a US entity, the perception of your company is different than if you're an African entity. So we have also a mindset issue on the business level on the ground side. So yeah, it's sad, but it's just a reality.
Yeah, I think, and I'm sorry to grab the mic like this a little bit, but I feel pretty strongly about this. I think that there is this perception problem, and I think there's a lot of it comes down to what we talked about before, like confidence building, right? You're trying to do confidence building with your employees, with your investors, and they're looking for like comfort. They're looking for reference points, right? A lot of investors are looking for ways to de-risk their investment. So I think what I've seen is similar in that the pattern matching that people are used to doing here in the US sometimes doesn't work in a new market, right? And so for a US investor, they're trying to figure out how do I think of this company? And so I think if you set up a C Corp, you're basically getting rid of one of the big things they're trying to figure out, because like, as you say, they would have to due diligence the country's legal system as well. And I guess I found that that's actually a much broader thing than just the legal entity. I find that, they're used to looking at where people went to school here in the US to figure out how to judge the entrepreneur. That just doesn't work in a global context, right? I think personally it's quite myopic, but people often look at like, oh, I know someone who knows someone who knows you. I'm going to talk to those people to vet you as an entrepreneur. That doesn't work if you're coming from a completely different network, right? And then also friends and family in the US means something very different from friends and family, I imagine, in Africa. I mean, I don't have to imagine, I've seen this, right? So I think people expecting that you can raise several $100,000 from friends and family is also a very Western perception. And so I think that I found a lot of what I have to do is actually bridge that gap and serve as the interpreter, right? To say, well, these are the patterns we use to evaluate founders coming in, and here's what we see that's quite promising. And this is actually going for quite a way. And I guess the other thing that I found, which people don't often appreciate, is you often have to build your own infrastructure as a startup because the infrastructure doesn't exist. And so the lead times for getting to product market fit can be much, much longer. And then in some cases, the best thing to do, frankly, is just to be a small profitable company for a couple of years to build that infrastructure and get really comfortable before you even start raising, which is very different from the common investor perception people have of like, you start something, you draw up a big plan, and then you go out and raise right away for a plan. So I find that bridging is super important, but also takes a little while. But the people who pull it off, it actually works out quite well for them. I'm glad that you were able to do the C Corp thing yourself. I think that's very exciting.
Yeah, absolutely. I mean, if you look at the stats, I mean, the data speak for itself. Anybody raising $1 million plus have structure outside Africa that I've seen, that I know personally. And the data speak for itself. I mean, there's two things. I mean, again, the trust issue. When you talk to investors about Africa, it's already a negative, connotation with all, this and that. So when you pitch investors, especially from the West, and you're right. I mean, I've talked to investors where they want to see 300% yearly growth, but they don't understand the ecosystem. It's different. It's not like in the West where the infrastructure is already there, as you mentioned. So there's a lot of there's a lot more work of convincing you have to do than if you were, doing business in Europe or in the US. But still, it opens more doors because there's a lot more VCs in the US, for example. So you have a lot more chances to raise capital over there. And from my experience, I've seen that US investors are more willing to take risk than African investors, especially in technology. So they're more open on risk than African. So yeah, there's a lot of plus, but there's a lot of challenges. But the things are changing for sure.
Yeah, we're glad for that things are changing. And I wanted to ask Mark, do you think these trends that we're seeing that are bending towards remote due diligence, do you think they'll stick even after we've gone back to, I don't know if we should call it the old normal, or do you think these are trends that will stick even after the pandemic is no longer in our minds? We wait for that day.
Yeah, I think I think it's a byproduct of the more general question of, do we go back to normal, and when and if we go back to any kind of normal in terms of expectations of in-person work and in-person meetings, right? I think it's always going to just be a byproduct of that. I actually think there's actually a big geographic split here. I think, because the vaccinations aren't evenly distributed, I think I am imagining that we're going to have a situation where in a lot of countries, remote work is going to stick around for a while, and limited travel capabilities or willingness to travel is going to be a reality for a while. And so my expectation is specifically in regions in Africa and other regions I work with, for example, in Latin America, you're going to have a situation where people are going to have to get very used to dealing with online virtual, due diligence, virtual calls, virtual pitching, and then I think in the U.S., to the extent people are raising money in the U.S., I think people are irreversibly right now more comfortable with Zoom pitching and investing off of a Zoom call. I think there will be a bit of a reversion to the mean where people are doing more in-person networking and there are going to be some in-person meetings. But I think the big breakthrough is that it's not going to be a hard requirement, right? I think before there was a hard requirement that you had to pitch to the partners for a large Series A or a large Series B in person. It was considered odd. And something that had to be highly curated if you basically try to do it over a video call. I did pitch and close our Series A at PageWay off a video call, but I remember the work that went into that because it was considered such an exceptional thing. And so I think that, I think that is going to be helpful. It's going to be a bit of a democratizing force, but I also think my expectation, especially in Africa, is that there's going to be more comfort around virtual work and virtual due diligence and data rooms. And I think that's great because I think things will be digitized more. And I think it's actually interesting to me that a lot of the markets I've been in that are usually very focused on in-person work are now being forced to focus completely on remote work, right? And so, it's creating these interesting dynamics. So, for example, I spent time in Mexico. In Mexico, they love having lunch and dinner together for work and talking about work over meals. It's just a really big part of the culture there. And, they haven't been able to do that. They're still not back in the office there, but they are now opening restaurants. And so what people are doing is they're not going to the office, they're just going to restaurants to do their work. And so it's like a whole different like cafe culture kind of thing, which I think is interesting because more connections are being made. I think that's great, right? Office can be a depressing place. It means people are drinking a lot more because they love having their tequila with their lunch there. But I think that what I'm seeing is that there's actually sort of a shift in how work is done. But I also think 50% of it will change irreversibly, but 50% of it will probably continue.
Okay, thank you so much for your insights. And my key takeaways from today's panel has been that, yes, we may be moving towards a more remote approach to due diligence, but there's still a part that cannot be covered by the remote due diligence. And of course, we have to keep adjusting and adopting depending on what is presented to us, but business must go on. So I'll allow each one of you to give us a parting shot as we close this panel discussion. Henry, could you go first?
No, I mean, the only thing to say is I've been back 8 years now, and I've seen the ecosystem improving dramatically. This is getting much, much easier and much, much better for the startup ecosystem, especially in the tech space, even in the hardware space, which is a huge gap in the ecosystem to really grow. But there's still a lot of work to do, but I'm very optimistic of the future. I've seen how easily it is to now operate in different countries and scaling. So this is definitely the best place, or the best time, I should say, to start a business in Africa, for sure.
Thank you, Henry. Yes, Mark.
Yeah, I think I would just say that, first of all, I like thinking in terms of like broad themes to begin with. And I think the broad theme is that, from a demographic point of view and also economically, Africa is rising and continues to rise in a big way. I think what we're seeing is more leapfrogging of traditional models. And I actually, I work a lot in crypto, and in crypto specifically, what we're seeing is a lot of really innovative companies coming out of Africa. And we also see the diaspora coming back into Africa, which also is a really important sort of voting mechanism. People are seeing opportunities to come back into Africa and start businesses, which I think is really, really exciting. And so, I think whether it's companies like Leaf Global or Paystack or, a couple of other companies that I'm familiar with, these companies are growing really quickly, which is great. I also feel that when it comes to fundraising and remote due diligence, what we were talking about before, I think we've had this thing happen that is democratizing, right? The pandemic has allowed us to do more online. I think it's up to the founder to find a way to use that to their advantage. I think, as Henry probably knows, you basically need to find every possible advantage and opportunity when you're a founder to sort of get to the next level. And I think the fact that people can now reach out to absolutely anyone on LinkedIn is relatively new as of the last 10 years. But then you can also pitch via video call and you can share all your information in a data room, and you can close documents online, and you can basically have your complete cap table on Carta. And of course, you can have the investment dispersed immediately, and maybe eventually even dispersed over a blockchain. I think that's a new world that has never existed before, and I think that should be exciting for founders, because all of a sudden they can do things completely differently and much more quickly than they could before. But then it's still up to the founder to find those opportunities. And so I think, I would just say Next Billion Advisors is available to help founders find those opportunities. But, my heart goes out to every founder who's trying to make it happen. And, I think I would say stay hungry and try to exploit all those opportunities.
Thank you so much, Henry. So I'll just piggyback on that and encourage the founders out there to stay hungry, as he said, and to always know that regardless of the changes in the environment, there may be a way that you can make the most of those opportunities that are presented even in those changing environments. So thank you so much for joining us today. And I hope you've benefited a bit from the discussion that we've had with this panel. Have a good evening.
Thank you very much.
Thank you. Take care.